What's up, y'all? My name's Dave. I'm a financial advisor. I'm here to help you secure your future financial stability and therefore your freedom to live your life. Quick disclaimer before we get into the video. This is free financial advice. Please follow it at your own discretion and don't sue me. Thank you. Today, I'm going to be teaching you how to invest in a way that is simple, effective, and data-based, right? Because investing is not just about choosing good investments. It's just as important to have a good investing strategy, or else you're going to shoot yourself in the foot and not make as much money or even lose money when you otherwise would have made money. So I like to compare building your investment portfolio to building your own little robot, right? Both of them, you want them to act autonomously. You want to be making money without having to actively do anything. And you both want them to reach your goals, right? So your little robot, you can make him jog to your goals, or you can make him sprint to your goals. And in terms of your investment portfolio, that's really asking, okay, how aggressive do we want to be in trying to make as much money as possible, right? Or do we want to be jogging, or do we want to be sprinting? And so this investment I'm going to show you is an example of a robot that jogs. Um, this is BND, which is like the total bond market. And if you don't know what a bond is, don't worry about it. You don't need to know. If you're curious, feel free to Google it. But this is the robot that jogs. In the past 5 years, the total bond market would have turned, your 10K into about 10 and a half K, which is a lot better than a bank account, right? In a bank account, that 10K 5 years later would still be 10K with plus or minus like 4 cents, right? And so at least this robot's moving somewhere. We can compare it to the robot that runs the total stock market index. If you don't know what a stock is, feel free to Google it. Again, for the purposes of this, you don't really need to know. But the stock market compared to the bond market is the robot that runs. And in this graph, you can kind of see why. In those same 5 years, when the robot that jogs, that blue line, the bonds, would have made you $500 on your 10K, the red line, the stock market, the robot that runs, would have made you, what is that, $7,000 on your 10K, right? Pretty huge difference between the two. But like all things in life, it's a double-sided blade, it's double-edged sword. When you're at a jog and you hit a little trip, you hit something in the road, you'll stumble, but you'll be able to get up and keep going, right? But imagine instead of at a light jog, you're at full sprint and then you hit something. You're going to face plant, right? And we can say that happened really clearly during COVID. The robot that jogs, while it has a stumble, gets up and keeps going. The robot that's running has a pretty hard face plant. And looking at these face plants really is the crux of having a good investing strategy, right? So many people will sit through the entire face plant and then sell their investments, having lost all of that money. And why is that? It's because they're too focused on the face plant and they're not asking the crucial question, which is, okay, is this still a good investment? Is this robot, going to get back up and keep running to my goals, or did it break on the ground, right? They just sell because it hurts to lose money and they want to be done with it, right? And a huge part of good investing, of having a good investing strategy, is being able to see these scary moments, these crashes, not as threats, but as opportunities. And I'll explain why right now. So someone who invests, without a long-term strategy, what's driving their investing decisions otherwise? It's usually emotions, in my opinion, right? And COVID's an amazing case of how lacking that long-term strategy can lead someone's emotions to drive them to make really bad investment decisions. So we look at COVID in particular. In late February 2020 is when the world realizes that COVID is not staying in China and this might be a bit of a problem. And the stock market quickly plummets. And you'll notice on the way down, we get a little spike right here. So an investor who lacks this long-term strategy, who's watching their account every single day and letting their emotions build inside of them this whole way down, right? Because it is scary to sit through a stock market crash. I don't want to, you know, minimize the emotions that are completely normal that everyone goes through during these crashes. But at the same time, I want to highlight how those emotions can lead you to shooting yourself in the foot. So they're watching this crash, their anxiety is building, they see this little spike, and at the moment they pray that it's over, right? That it was just a short-term free fall and that we're going to rebound from here. And instead, we continue to fall, right? And so now that FOMO, right, that fear of missing out is building in them, right? They're thinking, shoot, I should have sold when I had this chance. Now we're continuing to crash. Next spike I see, I'm selling. I'm getting out, right? And in late March 2020, they get their opportunity, right? We have another long crash and then another spike. And a lot of investors who, their emotions have been building this whole time, it's anxiety producing to watch your bank account, your investment account drop like that. And so they sell right at the end of March and then proceed to miss one of the biggest stock market rebounds in history, right? This is why cases like this is why studies have shown that investors who simply buy and hold the stock market, as in buy and literally do nothing, like could very well have forgotten about the account, right? And just let the investment grow, do better than the everyday investor. And it's because the everyday investor lacks a long-term strategy that helps guide them through these turbulent times, right? And I mentioned earlier that, with a good strategy, we can see these downturns not as something to be afraid of, but as an opportunity. And here's how. Imagine your favorite store. I've heard a lot of people I help invest say Urban Outfitters. So let's say Urban Outfitters has this policy where you can return anything you buy from them at the price they're currently selling it at whenever you want, right? So imagine you buy really cute top and you love it. And you love it so much, you go back 2 months later looking to buy another. And lo and behold, Urban Outfitters has discounted the whole store 30%, right? Would you rather A, sell back the top you already bought at 30% less than you bought it for, or B, go buy a second top at 30% off? And it sounds like a trick question, but it's not. Most people say B, I'd rather just buy a second top at a 30% discount. Why would I sell back my other top and lose 30% of my money, right? But the stock market is the exact same thing, right? This investment was the same in late February as it was in late March, as it was in January of 2022. It's the same investment, right? It's the same top. But depending on, what timing you have in the market, you could be buying it in a major dip like this or at the top, right? And obviously, if we want to make as much money as possible, our goal is to buy it during these dips, which is really hard to do without a long-term investing strategy. Because during these dips, the media is going to be pounding you with negative news, right? Oh my gosh, this is the first pandemic we've had in over a century. No one knows how work from home is going to, affect productivity in the economy. No one knows how small businesses are going to stay afloat. They're going to be brought why this could be your worst stock market crash in 2008, right? They're going to be throwing all of these negative headlines at you. But the key is to remember that if Urban Outfitters is discounted 30%, you want a second top, right? If the stock market, I say 30% because that's about how much we fell during COVID. If the stock market's down 30%, then you want another stock, right? Because it's the same investment. It's just now priced at a discount. And so how do we generate the confidence to sort of drown out the noise that, the media will be throwing at us. Your friends and family who invest are probably going to be following the media's example in doomsaying. How do we build the confidence to shut out that white noise? And the key is to invest for the long term, right? We can sort of see how this works out if I change the time frame that we're looking at. So over the past month, this same investment, we've had a pretty good month, made $600. Over the past 3 years, it made $5,000. Over the past 10 years, it made $20,000. And since it was founded, $10,000 back in, when is this? Would have turned into $109,000 in 30 years, right? And so you can sort of see this point I'm making, which is that if we invest over long time horizons, we can be pretty confident that the stock market will continue to do well, right? It survived, the 2000s bubble that we had, survived the 2008 financial crisis, it survived the little crash we had in 2018, survived the COVID crisis in 2019, and right now it's making its way back from interest rates rising in the past 2 years. And how does this impact us? It means if we invest money that we can afford to leave for the next 10 years, 20 years, 30 years, but if you're like, oh my gosh, it's like 10, 20, 30 years, that's so much time. 5 years, I think, is the minimum that we can invest and still be fairly confident we'll have made money by the end of it. Then that can give us the confidence to invest during times like COVID, right? If we're investing money in COVID at a 30% discount, knowing we plan on sitting on it for the next 10 to 20 years, then it doesn't matter whether people think, oh, this crash should be worse than 2008, or, oh my gosh, this is why a pandemic is, the worst thing that capitalism's ever seen, right? Because we have confidence just from the history of the stock market that it's going to get back up and it's going to continue going up, and that in time, our investment will be making money. So the next obvious question is, okay, so what's the actual strategy that I should be investing with? How should I be investing? And how I invest, I get my paycheck every other week, and I know how much money I need to last in between weeks. And so I draw down my bank account down to that minimum amount of money I need to last me in between paychecks, and then I send it all to my investment account, and then I invest all of it, and then I do that the week after, and then I do that the week after, and I will be doing this for decades. And it's as simple as that, right? Why do I do that? Why do I invest for the long term, and why do I just buy no matter what the time is? Because it's simple, right? I don't have to research individual companies to see if the stock market's undervaluing them. I don't have to keep tabs on if a company's new CEO has a good track record or not, or whether their new product's going to be successful. I don't have to keep track of my investments to figure out whether the stock is too expensive and I need to sell, because as we've seen, the stock market as a whole just goes up over time. And if you're curious, this is not the exact investment that I would recommend for most people. Go check the video that I'm going to link in the top corner for the actual investment, but all of these principles still apply. I also use this strategy not only because it's simple, but also because it's effective, right? We're looking at the graph that shows why it's effective. Since 1992, your $10,000 would have turned into almost $200,000 without you doing anything, right? If you had put those $10,000 in and then forgotten the account existed, you would still have gotten here, right? Without any active on your part. And that's sort of the beauty of investing, right? And the last reason I like this investment strategy is it's data-based, right? None of this is based off of my narratives, my guessing on what's going to happen in the future, or how this product line is going to play out, or how this company is going to take over the market. It's just showing you exactly how this investment has performed over the past few decades, right? Tons of data on how this investment has performed. So together, I think this investing strategy, sort of investing for the long term, only investing money with the belief that you're not touching it for 10 years, right? 20, 30 years, takes all of the luck and skill out of the equation of investing, right? It makes it perfect for everyday investors like you and me who have other things to do with our lives than play in the stock market all day, right? And studies have shown that the buy and hold strategy with a long-term outlook, is the best strategy for everyday investors to take advantage of the stock market and secure your future financial stability. But that's everything for today. I hope you enjoyed the video. Check the description below for my link tree with the rest of my YouTube videos. If you want to receive updated investment advice relevant to the stock market today, then fill out the Google form in the description and mark that you want to be added to my newsletter. If you want free, personalized financial advice from me, fill out that same Google form and add me to your investment account as a view-only role. That's going to allow me to see but not actually do anything with your account, so I can't, steal money or whatever. I'm just gonna be able to look at your account so I can give you free, personalized financial advice. If you're unsure how to add me as an authorized viewer, call the customer support phone number for your brokerage firm that you opened an account with, and they'll be able to help you out. You may be wondering, why am I offering financial advice for free? Well, in 20 years, when you've made your money from this investment advice and you're looking for a financial advisor to give you more comprehensive assistance, I want to be the first person you think of, and I look forward to embarking on that journey with you. That's everything for me. Congratulations on starting your journey towards your financial freedom, and I'll see you next time.